In today's video, I'm going to be showing you the ultimate trading strategy. You'll see high risk to rewards, concepts that are based on the facts of the market, precision price action trading, and I promise you, you'll learn something new in this video. My name is Luke Burton, co-CEO of Not Just a Trade. I've been trading on the 1 minute chart for over 4 years with one currency pair, and today I'll show you how to read the charts with absolute precision. So we're just now here on Euro USD. This is the 1 minute chart on Euro dollar. And we use three main concepts. So the first concept that we use is RAMC. This is a bullish or bearish order flow pattern. This is where the banks enter into the market, range, initiation, mitigation, continuation, or on the other side, we've got range, initiation, mitigation, continuation. This is a bullish or a bearish order flow pattern. This is also supply or demand being placed into the market. For example, range creates demand, pullback, mitigation, continuation, or range creates supply, pullback, mitigation, and continuation to the downside. That's an order flow pattern that also creates structure in the market as well. And that's what we use to read the direction of the market. The second concept that we're going to use is the location concept. Now, this is what we use for the location concept. We have the fib tool, and all we're doing is looking for premium and discount prices, premium prices, discount prices based on whether we're buying or we're selling. We also have those extreme prices, which will be the edges, as we call them. These are the best locations inside a price range as well. So we also want to focus on those as well. And then market structure, right? We're either in a trend, we're in an initiation, or we're in a sideways range. So those are going to be the main three concepts that we use. I'm also going to show you some other concepts that we use as well. So now just reading the price from left to right, we need to understand what price has done to lead up to the point that we currently are at. And this is important to understanding and just getting into the flow of price and just reading how price is delivering. So we can see here we had a sideways range, and this is 8 o'clock, right? This is London open. At 8 o'clock, we typically see a lot of volatility at London open. And sometimes we can also see manipulation as well. So we can see that prices run this previous swing low here. We created a sideways range, which means new orders are created into the market. We initiated to the upside, and we can see the aggression and speed in that initiation here to the upside as well. Now, if price had just stopped here, we have to also just scroll out and just think about what price could be targeting, because if we've seen the manipulation, we've seen the intention for higher prices with this aggression and speed in the market, which is that momentum. Now we have stacked highs up here, right? These highs are all stacked together. So this can become liquidity targets for price as well, following that bullish intention that we've seen created out of this sideways range and initiation to the upside. So we're now just mitigating out the sideways range that we have here to the left, as we can see. So now if we think price has stopped at this point, right, which means we have to react out of a sideways range. So if we look left, we can see that this is that sideways range that price has reacted out from here before price initiated to the downside. So again, sideways range here and initiation, it left unmitigated, and we mitigate out in the future. Now that mitigation is then used as a pullback for a continuation to the upside. And we can see in that pullback as well, price creates that new sideways range here, followed by initiation to the upside, which creates that new intention in the market. And as we can see, that reaction there from that range, that creates a large new sideways range in the market as well, followed by initiation to the upside. So we can see that bullish intention is continuing to the upside because we're seeing the aggression and speed and the momentum continuing to the upside. So now when we think about what price has done, we've reacted out of that sideways range. That's created a new sideways range. So I'll just draw that in the box now. We've seen the intention continue to the upside here as we see. Now this is just a reaction here. This will be a range. We could go back and find out which range it is, but obviously it's pretty far into the past. But we can see that that creates just a reaction. You see the difference between price creating a sideways range is when price creates that range, we run the high and we run the low, and then we see the initiation, compared to if price moves up into a mitigation and we just react and then see continuation. That's just a reaction to me, whereas this is new orders being created in the market. So this is not something that I would trade out from essentially this one here, because it's just a reaction. I want to trade where there's orders being placed in the market. So now we can realize that this low is just going to be created for liquidity in order to transact new orders into the market when price does come back into this sideways range that we have here. We also have to think about a perspective of location. So this is the lowest point that we have down here. This is the highest point that we currently have at that time. So if we put on our location tool and we're buying at discount, we can see that this range is also created at a discounted price. So when price does come back into this range, We don't necessarily have to trade it specifically as a reaction with our stop underneath this low. But if we're looking for intention coming out of this range, and like I said, that intention is that aggression and speed, we can see that when price comes back into this range, we run this low here as well, which then gives that opportunity for the new order to be created into the market. We see the intention here, so we could play that as a pullback and continuation. So this could be a potential opportunity that you can get involved in. If you didn't want to get involved in that and you wanted to wait for the further intention of price, we can see that the continuation happened, right? So we got a sideways range created here, initiation, mitigation, continuation. And remember, this is happening at a point of mitigation where previous orders have been created in the market. So this could be an opportunity for a trade that you could take, and I'll just add on the framework for this so you can see it. Sideways range, initiation, mitigation, continuation in the market here. So this would have been a possible opportunity that you could have got involved in. When we think about a safe stop, the stop only needs to go below the range low, because if the intention's higher prices, they're never going to push price lower than the range low. So that's where your stop can go safely. And for us, we're always looking for those 1 to 10 risk to rewards in the market as well. So this could have been a potential opportunity. The reason the entry goes here is because we're just going to put it at an average price, right? 50% of the range. Probably could have even got a tighter stop on this one as well. But at the average point of the range, if you don't have a specific order block that you want to play inside the range, which essentially you do here, you have a run below the low followed by initiation to the upside. So that is your sell to buy. But, just because it's such a small range and because the stop's only around 2 pips, you don't need to be so specific. You can just play the whole sideways range. And obviously then that sees continuation to the upside. And what price is actually doing here, if we just remove all of what we've just seen here, price is mitigating out, but we're also creating a large sideways range because we've run this low and we've run this high. This is actually creating a very large sideways range. So I'll just draw that on so you can see here. So we've created that large sideways range and then price has broken out to the upside. Now, this is a higher time frame range that is being represented on the lower time frame with the delivery. But we'll just play this forward now. We're just playing the continuation and just understanding that would have been a potential 1 to 10 risk to reward that you could have got. And as we see the intention continues, we break structure here. This is that lower time frame structure. All we're doing is looking at the intention continuing to the upside here. And what do we have? We have an inside bar followed by initiation to the upside. And that's a representation of range and initiation. That is demand being created in the market. Then when price comes back into that point of demand, which is that range, that's where we look for that continuation back into that high here. And that creates that range, initiation, mitigation, continuation, which is that bullish price delivery in the market. And that's what moves price higher and lower. And that's also what creates that structure in the market as well, where we get those higher highs and higher lows. Every single higher low is going to be a reaction from a sideways range. And then a higher high is going to be a breakout and a continuation of that range to the upside. So as we see here, we just get the continuation from that sideways range. We take out the high, we break structure. We're just seeing that bullish intention continue. We break structure, we pull back into a sideways range that we have here. Initiation, mitigation, continuation. And again, we're just seeing the same price delivery, which is that bullish order flow, just continuing to move price higher. Range, initiation, mitigation, continuation. We can see that the lows also as well here, just as we had before, create that liquidity in order to transact that new sell to buy into the market. So when price comes back in, we can play that as our mitigation, continuation to the upside. We also have to be thinking about what is price creating as we're moving to the upside, because it's not just about following the bullish order flow. It's also about understanding the lows being created at certain prices. So we can see here, we have stacked lows being created at all of these locations here. So when the intention does become bearish, these are going to be the first targets for liquidity for price. And because they're created at a high price as well, overall in this move, these will become liquidity targets following that intention to the downside. Now we can also see that price is starting to slow down here. So we can see here that price is moving very aggressively to the upside with these legs. Now these legs are starting to get a bit shorter, right? We're starting to move into more of a ranging structure, which means price is starting to slow down. So we're starting to create new orders into the market. So we can see that every time price runs above highs and above lows inside a sideways range, that gives an opportunity for a buy to sell to be created into the market, or a sell to buy to be created into the market as well. And that's bank orders being created into the market. So I want to be aware of what price is going to do when we take out this high. We're also coming into this higher time frame sell mitigation, which is a sideways range created on the higher time frame. And we're coming into that point of mitigation now in the future. And we're starting to see price slowing down here as well. So now we're just going to observe and just see what price is doing. We can very clearly see that the bullish order flow has still continued. You know, we can still identify sideways range and initiation, mitigation, continuation. We're going to continue to see that. And we've also got another sideways range here that's initiated to the upside. Now, this range, every single range has to be reacted out from. But depending on the price location, depends whether that actually reacts and follows through and sees a continuation of that momentum either to the upside or to the downside. So we can see that we have created this range, but that range has also created liquidity here, and we're coming into a point of mitigation. So for me, this is not a range I would want to trade as a continuation to the upside, because if I'm trading 1 to 10 risk to rewards, I'm expecting price to be in that next extension of price, in that higher time frame extension. Now, price is not showing me that it wants to create that extension at the moment. And like I said, we're coming into that point of mitigation on the higher time frame, where I expect that we're going to see a higher time frame reaction, which actually creates a move in the opposite direction. So I'm starting to become into a more neutral state of mind coming into this point of mitigation. So let's just play this forward. So as we can see, we're pulling back into that sideways range. We get that mitigation and we get that continuation. This is obviously news as well here. So we get that range, initiation, mitigation, continuation. We continue and take out the high. Now, like I said, because we're in that large sideways range, when we run the highs, that gives an opportunity for a buy to sell to be created in the market, which is a new bank order. And obviously, because this is happening at a point of mitigation, this is where I'd stay more neutral. I'd wait for a new intention in the opposite direction. Then I want to play alongside that new intention. Now we're stacking the confluences together, which is the concepts, to build a high probability trading idea. We're not just using structure and just saying, well, because the structure is bullish, we have to see continuation. We're understanding we're at a point of mitigation. Our mindset has become more neutral. We're understanding that liquidity is also being created to support a move to the downside. And now we're coming into a point of mitigation. So now we want to understand that price is slowing down. We've run the high. So now we can start to see that new intention. Now we don't need to trade straight away. We're only going to trade when we see a pattern or something that we recognize in that direction. But until we do see that, now we're really in flow of price. We're understanding what price wants to do, where it could go. And now we're just waiting to see something that we recognize so that we can play a continuation of this momentum. As we can also see as well, price has now really stacked the liquidity underneath these lows as well. So if the intention continues to the downside, these will all become first targets for price. We also want to think about, because price has moved slowly into this point of mitigation, if we start to see some aggressive moves away, that's the sort of momentum that we'd want to see in the market in order to trade continuations. So we can see that price is just still in this sideways range. What I'll do is I'll put the whole sideways range on so that you can see. Even though we have smaller sideways ranges in here, like so, we have sideways range and initiation, price comes in and mitigates, and these both ranges are used to then hold the sideways range, to then create orders into the market, to then potentially use those orders to move price, right? But it is just a large sideways range that we're in. When prices run this high, this is just one big sideways range. So even though we can identify the smaller sideways ranges, we just have to understand that price is just creating orders at the moment. So let's move this forward. Now that's a lot of aggression and speed in the market to the downside. And again, look at what we're creating. We're creating more liquidity here. So now we're just moving price forward. We're still in this sideways range. Nothing has changed. Now, just because we're in this sideways range doesn't mean price has to run this high anymore to create new orders into the market. We could also use the highs that are inside the range, and then we could run the highs and then drop out to the downside. Again, I'm not trading anything at the moment. I'm just observing price and I'm waiting for something very clear. So as we see, that's a lot of aggression and speed to the downside. And when I say aggression and speed, I'm looking at the imbalance created in these legs here. That shows aggressive selling in the market. And it's come after price has run this high. They've protected this whole buy to sell in the market. So we can see that when price came back into here, we saw aggressive selling away to the downside. And then we targeted this liquidity that we had stacked here as well. So now we're starting to see some intention into the market, right? At a point of mitigation from a previous sideways range where we'd expect price to see a move to the downside. We can see that this high has also been created at the top of an hour as well. Typically, when we get new directions in the market, they're going to be created at the top of the hour. So if we were coming into a point of mitigation at that time, that adds confluence to a direction. So let's just play this forward. We can see all that liquidity now built up there to the left is now being a target for price. And we're just seeing continuation of this momentum to the downside. Remember, I said this is going to be a higher time frame area. So we expect a higher time frame reaction. Now, because we're on the 1 minute chart, if this is a daily area, then then we expect a bigger reaction to the upside or to the downside, which is what we're seeing here. This might be a very big move on the 1 minute chart, but on the daily, this will be a small reaction at this point. So let's just play this forward. We are also reacting out of sideways ranges that we have built up here to the left. This is where we expect price to react out from. These mitigations that we see here aren't necessarily going to carry an intention of higher prices, but they might carry an intention for a pullback or new liquidity to be created on the right-hand side for then price to target that liquidity to the downside. So let's just play this forward. So obviously we're now reacting out of the sideways range that we have here to the left. When I'm thinking about price reacting out of a sideways range, I want to be thinking about what does it go on to create and what's the location of this sideways range. Because if we zoom out and we really think about higher time frame perspective, this range has created a very high price on the higher time frame. So typically, these are just going to become those reaction points to create liquidity and then see continuation to the downside. We can also see that this low here and this low that we have here to the left, these are creating stacked lows, which again, if the intention continues to the downside, this will be liquidity that price can start to target for an intention to the downside. So if we were creating a trade idea, or if we were looking to create that trade idea, this would be a location that we would expect to see continuation of price. So we see we're just reacting out here from this sideways range, and now we're starting to see that continuation in price here to the downside. We've just taken out the low and we followed through with price. So now what are we creating, right? So we've taken out all the liquidity that we've seen here to the left, so we'll just get rid of all that. And now what is price creating? So we're starting to slow down. Even though we're in this very aggressive move to the downside, we can see that price is starting to slow down overall and just start to move sideways at this point of mitigation here. Now, what else is price creating? Well, we have a low here and we also have another low here. So we're seeing stacked lows being created in the market, which again is liquidity following that bearish intention to the downside. So it's now really about what is price going to do from here. Does this start to initiate that pullback and then continuation, which then means that we can start to look for those trading opportunities, and we can use this as our high and our low, and we can use our location tool to find premium prices and look for ranges that are created at premium prices so that we can play these as continuations, or because we're in initiation structure to the downside, price may just create a new range and just steer continuation of this momentum to the downside, which is very typical delivery if we're in that initiation structure to the downside. So these are the only two things I'll be looking for. I'll be looking for a pullback to look for an opportunity to get involved in this move as a continuation to the downside, or I'll just be waiting patiently for price to create a new sideways range and an intention to the downside. And then I'll see if there's a good trading location that I can get involved in price. So as we see, we get that continuation to the downside now. We take out the low that we have here, which would essentially be a 1 minute swing low within price as well. This new sideways range has initiated here to the downside. We took out all the liquidity. So all of these ranges that we have here to the left, these will all still be reacted out from because these are all areas of demand or previous demand in price where we've reacted from previously. So I expect that price is going to react out of these locations in the future. I don't want to trade based on these locations because the intention right now is bearish. So I want to look for selling setups in line with that intention to the downside. But it's always good to observe how price is reacting out of these sideways ranges because there's always something more to learn. So let's play this forward. So as we start to see, we're starting to get that reaction here as well. And like I said before, what are we creating from that reaction? We can see that price is in a sideways range here now. So we started to slow down again, just move sideways. We've also created more liquidity. So we see there's liquidity underneath this low here. And because this low is right next to this previous low, these become those relative equal lows, which again becomes a target for liquidity to the downside. So even though that I'm not trading, I'm starting to build the understanding of where price wants to target if we do start to pull back or if we do start to create those sideways ranges. I'm also trying to look for and understand the intention of what the sideways ranges are created for here. Is the intention to create that pullback to then see continuation? So we get that lower time frame bullish order flow that moves price higher to pull back and then see continuation? Or were these ranges only used to create higher prices here to see an intention of higher prices, and we're just mitigating out of the open orders to then see continuation to the downside? So let's play this forward. And what can we see in price? Now we're starting to see strong rejections of lower prices here after prices moving to the downside. So as we saw, we mitigated out of the sideways range. This created that strong rejection of lower prices. And when price tried to see continuation to the downside, we got a strong rejection of lower prices again at this previous order block, and now we're starting to see a move to the upside, and we've broken structure, and now we're starting to see that intention to the upside here as well. Now we are moving back into a sideways range. This is why we are seeing this reaction. If we react and follow through, this low is going to get taken out to the downside. If I'm starting to think about the location of price, again, this is that high and this is that potential low within price here as well. So if I'm looking to sell, all of this down here is at a low price, which is where a lot of traders get caught out. They see a bit of momentum in the market and they start trying to sell here, trading as a continuation to the downside. But it's always good to just be patient, wait for the good trade in locations, and then get involved in the continuations in price. If price doesn't pull back, then so be it. You don't have to be involved in every single move in the market. There's always going to be an opportunity for you to learn in the market and to get better at reading price. So you don't always have to be involved. But if this is that low now, and we've created that strong rejection of lower prices here, and we see this intention continue to the upside, this might be our opportunity to get involved in that pullback and continuation. So as we can see, price is now starting to pull back, right? So we have our very clear area with our A to B. Now, price has pulled back into a point of mitigation. We see here, we have an inside bar here. That's a representation of a sideways range. And again, like I said, we're not just looking for ranges at any locations. We're looking for ranges at premium prices. So this is an inside bar, the representation of a sideways range, followed by initiation to the downside. So when price pulls back into this area, this is an opportunity to play that as a mitigation and continuation to the downside. And then we have our very clear target for price, which is this low created here in that sideways range as well. And like I said to you before, ranges and points of mitigation in ranges is what creates structure in the market. So if we see a continuation of this momentum to the downside, that creates the next structure point in the market. So right now, the structure that we currently have is that high and that low being created. This is our swing structure at the moment, and we've broken structure low here, showing that intention, right? So when we pull back into these sideways ranges, if this then becomes that next continuation phase in price, that creates that lower high and that lower low in price as well. So we're always looking for ranges at good locations, and then we can trade alongside that intention with a clear target down into that low. So let's just draw this on now as well. And we can see that we're getting that reaction now at that point of mitigation. So this is a location where we could see that continuation to the downside. Now you could trade this here as a reaction with your stop above the range high in a safe location with a 2-pip stop. And obviously, like I said as well, our risk to rewards are always 1 to 10 because we're always anticipating those next higher time frame moves in the market. Now, if you didn't want to trade that as a reaction, then it's always fine to wait as well for that next move in price to see if you can get involved in a continuation of that momentum. Now, because you had a strong rejection of higher prices at this point of mitigation as well, and you saw intention, this would essentially be that lower time frame strong rejection, A to B, and you can play that as a pullback continuation on the lower time frame with slightly bigger stop on that trade as well. As I said before, ranges are created for a reason. We see a range here and initiation to the upside. That could have just been to mitigate out of the sideways range. So now we have to mitigate out of the orders used to push price higher to mitigate out the sideways range. This is where we'll see a reaction and then a potential continuation if this intention is going to continue here to the downside. So again, let's just play this forward. Now this is where we're starting to see those reactions here out of the sideways range. We can pick the specific order block inside the sideways range as well. As I said, we had an inside bar here to the upside, followed by initiation, and this is where we're getting that reaction here as well. Now we've seen a momentum shift at this point of mitigation as well, and this is that whole sideways range, initiation. So if price does pull back and see that mitigation continuation, this is again another opportunity where you can get involved in that continuation of price to the downside. So as we see that mitigation and continuation, we've now cleared the volume from this range here that was used to push price higher to mitigate out of the sideways range and see that pullback and continuation, which, like I said, creates that structure in the market, that high, that lower high. So now we anticipate that next lower low in the market here to the downside as well. And we're seeing that bearish order flow continuing, right? Range, initiation, mitigation, continuation. And then we're seeing a new sideways range created, followed by that initiation to the downside. And we're seeing the aggression and speed continuing to the downside as well. And we break structure here to the downside now as well. So that creates that structure in the market at those points of mitigation. Now we have to look left again. Like I said, these ranges will be used for something. So we have an unmitigated sideways range here that was used to initiate higher prices. Now, this is either just going to be a reaction out of price here because the intention at that point was to create higher prices, or this initiates a pullback and a continuation to the downside. And if that does initiate that pullback and continuation, then again, that creates more liquidity under here for price to target following that bearish intention of lower prices, or this low could just be used for liquidity because, like I said, the intention was higher prices at that point. It doesn't have to be higher prices in the future because we're following that new bearish order flow that we've seen in the market. So let's play this forward. So we see that reaction out of that sideways range now. What does that go on to create? Doesn't go on to create anything. Like I said, when we just get those reactions that don't create those sideways ranges, that's just a reaction out of the volume. And then we see continuation to the downside. And we've broken this structure low here now as well. So if we think about what price has done, if we're following that bearish structure in the market, we've seen a high, a low, a lower high, and we haven't created that lower low yet. We haven't had that reaction in price that's created that lower low. So this is still our price range that we're currently in between this A to this B at the moment. Price hasn't created that low yet. So we have to wait for price to slow down, start to pull back. And then now we can consider this as our new A to B price range. And then we can look into premium. We can look for ranges at premium prices. And then we can trade alongside that intention to the downside because we have our direction on the higher time frame, because we're at a higher time frame point of mitigation and we're seeing intention to the downside. So all we're going to do is look for ranges at premium prices that we can play for continuations when we do get those pullbacks and continuations. But like I said, we also have to understand everything on the left here because these are going to be reaction points or liquidity points for price as well. So we're seeing price just continuing to the downside now as well. We are starting to slow down here in price, and now we're starting to see a bit of momentum here to the upside as well. So let's just slow this down here as well and just think about where price has reacted. It's really important to understand what range price has reacted out from. So we see here that we have a sideways range when we scroll to the left, followed by initiation to the upside, and now price is reacting out of this in the future. Now we need to determine whether this is going to be used for liquidity or if the intention is to see a continuation of higher prices. Now we're still in that higher time frame mitigation. So all we're going to do now is adjust our A to B. And now we have our price range, right? So we're only going to look for sideways ranges that are created at a premium price. So we have this sideways range here, and we also have a sideways range here on the lower time frame as well. So these would be the two areas that I would look to trade out from. So let's just play this forward as well. And we just have to think about this might be considered as a sideways range here, right? But because in this A to B price range, this A to B, this is a range at a low price, we only want to be looking to sell at premium prices and buy at discounted prices. So this is a range at discounted prices. So we don't want to sell at a discounted price. So let's just play this forward now. We can obviously see as well, price is creating sideways ranges here in price. This is a sideways range. This is where prices contain sideways followed by initiation to the upside. So this will be used as something in the future, right? Because this low overall in the higher time frame is created at a high price, this will be used as liquidity following that intention of lower prices. So this range may be just created for liquidity, but it may also be used to initiate the pullback here. So as we can see as well, price is now starting to pull back here as well. We are reacting out of lower time frame ranges. So any of these points where we see those reactions within price, these are just lower time frame ranges being reacted out from. Now, like I said, because they're at a low price, these are ones that I wouldn't want to get involved in price. I just want to see what sort of liquidity that they're starting to build here, because all of these lows, there's going to be liquidity under every single low. So when the intention from one of these sideways ranges gets reacted out from, now this is going to become the target here to the downside, and we're going to use that as that liquidity target as well. So let's just play this forward. We can also see that price is creating ranges and initiations to the upside as well, as we see here. New sideways range, initiation, mitigation. If we react and follow through, we're going to see that as continuation. And we can see that the highs being created here could also be used for that liquidity as well to continue to move price higher up into ranges that we actually want to play out from. So what do we see now? What can we read within price? We do have this whole sideways range here, which I'll actually draw on now for you as well. And now we can see a new sideways range being created, right? We're taking the high, we're taking the low liquidity, we're transacting new orders into the market. So I'm going to draw on the two locations that I would want to trade out from as well. We have this first location here, and we have a second location here. So these are the two sell areas at a premium price following that bearish trend that I'd want to look to get involved in. But also coming into the top of the hour, 3 o'clock, this is typically where we see that continuation of a direction. So again, we're stacking the confluences on now at timing. And now we've seen the price run the low and we're seeing continuation of this range that's being created to the left to the upside. Now, what did I say before as well? When we get lots of lows stacked together, this becomes stacked lows, which is that liquidity, which when the intention becomes bearish, because right now we're in that bullish order flow on the lower time frame, we're in that bullish structure. When we get to that point of mitigation on the higher time frame at a premium price and we see the intention change, this will then become that target for that liquidity to the downside. Now, this is something that you could take as a reaction again with your stop above the high. This is a 6 pip stop, which is pretty big. So you could play this as a reaction here with the open, stop above the high with a 6 pip stop, and you've got a 60 pip 1 to 10 target there as well. Or you can just watch the flow of price and just understand what price is doing. Like I said as well, price is creating a sideways range here. We've run the high of the range, which gives an opportunity for that buy to sell to be created into the market, which is a new bank order. Essentially, that's that manipulation, right? When price runs highs and lows and moves back in, that's manipulation of price, which is creating buy to sell orders into the market as well. So we're at that point of mitigation now. This is where we see the intention continue of this sideways range, initiation, mitigation, continuation, or this just becomes a reaction point here and we potentially move higher. When I say intention, this is what I'm looking for. I'm looking for that aggression and speed in the market to the downside. That's what moves price higher and lower. So as we can see, we got the aggression and speed to the downside. We are mitigating out of a sideways range here. Again, that's either going to be used to create the intention of higher prices or to just mitigate out, create more liquidity for price to target to the downside. And we can also see prices creating a new sideways range here. After sideways ranges comes an initiation to the upside or to the downside. So it's good that we're seeing sideways ranges because we're seeing new orders created. We expect the next phase of price to be very aggressive. And as we can see, we see that aggression and speed in the market, which is that imbalance. And now we're seeing that intention continuing to the downside, and we target that low here to the downside as well. So this range was no longer needed. And now we see the next phase of price as well. And we see that prices also continued this momentum to the downside. And like I said, every point of mitigation at a premium price can potentially be that next lower high in the market. And then we create that lower low. So now this price range is completed. And now we look for our next location to take that as a continuation to the downside. So I hope you can see that just by understanding and reading the market and just by using a few simple concepts, you can start to understand the best trading locations to look for. You can read how price is delivering into those locations, and you understand why ranges are created, why liquidity is starting to be created, and you're following the market from how the banks move the price. This is the facts of how price has to move in order for the banks to get into the market and move price in the direction that they want to move price.
This week's community winners.
Thank you all for watching. Please leave us a like and comment if you enjoyed the video. If you want to find out more about how we read these markets with precision using the concepts, visit our website at notjustatrade.com. You can also find us on Instagram using the links in the description of the video, and we'll catch you guys on the next video.